also better than expected as well. That stock moving slightly higher in after-hours trading and also boosting, as Ashley mentioned, the tech sector around the world. Intel says PC demand is stronger than expected. Also, gross margins hit the highest level in company history, meaning it's making more profit really on everything it sells. And for the current quarter, Intel expects revenue to be slightly better than Wall Street's forecast.
All right, we have an instant audit on it this morning from Adam Connors, who's Director of Corporate Finance at CK Cooper. Adam's live in Irvine, California with us this morning. What about Intel? I mean, as Jenna says, the stock's up, but not a ton this morning, despite the fact that it had much better than expected figures. Great numbers, really, by most accounts. Does it tell you anything about the stock market rally, that Intel's not rallying more than this?
Well, no, I think, at this point, I think the stock market still has a lot of value that's been built into it. And so, eventually we're going to start seeing that it's going to top out at some capacity at some point. And so I think it's fantastic news. This represents about 80% of its marketplace. And so it's a great stock to own. And quite frankly, if there is any type of dip or if for some reason investors think that beating the street by 10 cents isn't good enough, you should be buying right here.
At the same time, Adam, we heard from Intel that it's consumer spending that's really propelling this company forward, not spending from corporations. Considering the employment situation that we have right now, should we be a bit wary of those comments coming from the company?
Sure. I'd be concerned overall as far as the situation with the unemployment affecting if there was a broad sell-off in the market as a whole. But quite frankly, businesses are going to have to spend, and Intel stated specifically that they haven't realized the spending from the businesses in that recovery-like fashion that everyone's going to be anticipating. So I think that they're positioned magnificently to take advantage of that moving forward, as well as the Atom processor that they've had. Right. That's in all the netbooks that seem to get people pretty excited on the consumer side.
Yeah,
so
the consumer side.
I think they're in a great spot.
Absolutely, they are individually, and these numbers again, very impressive stuff. Does it speak more about the tech sector in general, Intel specific? I mean, how do you look at other technology stocks, given the surprisingly strong quarter that Intel had?
I think it's a very positive sign, Connell, and like I said, I like them as a barometer because they are a umbrella and they cover many different business segments. And so, what you can do is you can start looking, paring down from here as far as particular sectors and things to that effect. I still think the consumer is going to be fickle, and especially the early part of 2010. Right. But I'm a little bit more confident in the businesses picking up their spending as they get a little bit more foundation under their feet, as hopefully we start to see more of a recovery.
All right, Adam, I don't need sleep Connors out there in California for us. Thanks, Adam. We'll talk to you again a little later on in the show.
2:05 Pacific time. All right, the other thing we're going to hear, we're going to talk about it right now in an instant audit. Adam Connors is back with us, Director of Corporate Finance at CK Cooper. What do you make of the pay, record pay, even better than 2007 on Wall Street?
Yeah, well, it's kind of expected. I mean, well, actually, I don't say it's not kind of expected. What's going to happen? I mean, the banks were given an opportunity to essentially hybrid all of their assets to the point where they're in a position to make some pretty good returns on some of their money. I mean, you have a combination of very cheap money still that the Fed's supplying, and the ability to start increasing their business aspects in all segments across the board. Mm-hmm. It's understandable that there's going to be a flux of some fatness on the margins, and that's what we're experiencing right here.
And then that may be true. And we're also hearing that a lot of these banks want to retain their employees, want to keep them there to continue those profits that you mentioned. At the same time, Adam, what are they thinking on a public relations side? How can they ever think that this is going to go over well?
And you're absolutely right, Janet. And it's a very precarious situation for them because not only are they the stewards of a lot of these folks, well, I don't want to say a lot of them, but it was a very important thing for them to pay back the TARP money as fast as possible so that they could retain the talent, because folks in my industry, they're not ones that do charity by day and moonlight as investment bankers. These folks are very opportunistic and they're very cutthroat, and so it's very important for them to go to where the money is. And if they're capped at $250,000 a year, whereas their neighbors are getting paid for doing the same job $2 to $5 million a year, guess where they're going to be within a week.
Yeah, they go with them. That's understandable. Everybody does that in every industry. It's just more money in Wall Street than it is in most other industries, and there's more attention paid to it. But also, a lot of these other industries weren't bailed out using government money, and that's where the anger comes from. With public anger, people saying, as Jenna said a moment ago, well, you know, wait a minute, we bailed you guys out. You wouldn't exist if it wasn't for government money, and now you're just passing that along in record numbers. Is there any answer to that, or is this just the way it is?
There unfortunately isn't an answer to that. I mean, I'd be very concerned, especially if you're at a bank that's reporting record profits and paying record bonuses, and you haven't paid the TARP money back.
Yeah.
But the investors in the TARP money, I mean, the taxpayers, for the most part, have gotten a majority of their money back, especially the ones that are going to be coming out announcing the large bonuses. And so Wall Street's doing what they can, and they're coming out of their culture as far as extending payments out 5 years. I mean, I've never heard of that before. I mean, those are some serious golden cuffs for the Wall Street folks. And so, and I know it doesn't seem much, and there's definitely a lot of public outcry, but it is what it is right now, unfortunately.
It is, and well, you're right. They're changing the structure of the pay, which does change things on Wall Street, especially for the people who aren't in the upper echelon and making, you know, millions or tens of millions of dollars. Adam, we'll talk to you again in a few minutes from out there in California. Thanks a lot.
Well, as far as the President Obama is using the big bonuses to justify his proposed differences between the Houses and the Senate's health care bill.
For more on it, Adam Connors is back with us from CK Cooper. It might resolve those differences, Adam, but it creates some new problems because now the Democrats are, oh, I don't know, maybe $60 billion short of paying for this bill, and they've got to come up with it in another way. A new tax, presumably. This is a good idea to raise these levels in the so-called Cadillac tax?
Well, it seems like that, you know, folks are going to get taxed in one way or another. I mean, it seems to be a real Robin Hood approach right now that the president's going to take in order to, you know, fix this gap. But as a bigger picture, what I'm concerned about is that here's the president asking everybody to entrust that, you know, let us do all these sorts of things, and once it's done, then you'll like it, instead of actually listening to the people. There's a lot of concern out there as a whole. I mean, the public is concerned about this, that things are moving too fast, and it doesn't all make sense.
Well,
and I'm concerned that it doesn't make sense.
Let's be specific about that, because the president did mention speaking about the public, their worst fears will prove groundless. What are our fears about this plan?
Well, the worst fears is that it will turn into a state-run system, and so there's going to have the talks. You know, there's horror stories in Canada where folks have life-threatening surgeries that need to be done, but they have to wait 9 months, and they're stuck, and they have to go across the border to pay. I mean, things to that effect. Those are the things that some of the people are concerned about.
But there's no public option in this one.
No, there isn't. But at the same time, people need time to assimilate what this is, and what my concern is that the president spearheading this PR campaign is trying to pass something that seems to be his own personal agenda, whereas I think these things need to gradually happen versus some type of overhaul that's going to overly encompass everything immediately.
The real concern a lot of people have still is cost. I mean, even though the Congressional Budget Office and others have said this will bring down the deficit, not push it higher, there's real questions about that, about whether that analysis will prove to be true in the long run, because it's only a projection and we don't know. As you look at things, maybe you're looking for investment opportunities or something else. I mean, how do you view the cost and who is going to have to pay for it longer term? How does that affect industry? Does it affect the way you think about investing?
Sure. At this point, I think it's they're going back to the drug companies now and asking to increase their $80 billion. And my guess is they're probably going to have to go back to the hospitals and have them increase their, I believe, $122 billion commitments. And so it's going to come from everywhere, and it's going to come from taxes, and it is going to cost a lot of money, and it's probably going to cost a lot more than what they're projecting right now. And so, you know, I think the public has a gut feeling that something isn't right, and I'm with them.
One of the things we have seen, though, over even these discussions of the last few days is the healthcare sector holding up relatively well on Wall Street, being one of the strongest sectors yesterday that we saw. You mentioned some of the potential effects in some drug companies out there. If you're looking for a longer-term investment, do you look at insurance companies at this point? Do you look at drug companies, biotech? How do you play that sector?
Sure, I would absolutely. I think biotech and medical companies are the best right now. I think insurance companies, there's going to be a lot of volatility and a lot of wild cards that are out of the control of the companies from a fundamental standpoint. I mean, what we do is we invest in companies. But right now, if you were to put money in the insurance companies, you're investing in regulation because you don't know exactly what it's going to do. And so what these proposals are doing can drastically affect these insurance companies. And so I think the biotech companies and the big pharma companies, those are the best play right now, especially in the long term with the baby boomers. I mean, those are still going to be coming through, and hopefully patents still hold water, and so they're still going to be making some pretty good top-line revenues from those.
All right, Adam, appreciate it. See you in about 10 minutes on foxbusiness.com Live.
Sounds
Okay,
great.
next up here, new threats